Hi, my name is Bin Shi. I'm the head of Chinese Equities for UBS Asset Management. Today, we'll be sharing some of our views on China, Chinese equity market, and the Chinese economy. I think to be fair to the Chinese government, Chinese government has introduced a lot of stimulus measures, but at this point not enough to offset the slowdown in the economy. But I think this stimulus will continue, and most likely over time it will have an impact. Like recently they have cut the interest rate, and the market responded positively. Right? So I think at this point, market really need to see a stabilization of the economy before they are willing to put more money into Chinese equities. But overall, we think the Chinese government is doing the right things on the right track, and eventually we think it will have an impact to the economy and to the market. Yeah, we think so, because if you look at the Chinese companies, their market share globally is going higher and higher, and we think the Chinese companies' competitiveness actually is stronger than ever. So you are seeing, Chinese cross-border e-commerce names taking significant market share in the US and Europe. You are seeing Chinese EV brands taking significant market share. So over time, despite some resistance, despite some competition from Western companies, we think because of the internal strong competitiveness of the Chinese companies, most likely they will take more market share globally over time. I think there are many risks surrounding listed companies, right? Political risk is one of those risks, but at the same time, business risk is another risk, which has nothing to do with political risk. So we should look at investment opportunities based on their own investment merit. SOEs, a lot of them, they are extremely cheap. They are offering high dividend yield. Certainly can become attractive investment target. But at the same time, they're not the most dynamic and most innovative companies within the Chinese equities space. So we have to look at other companies. They might have more regulation risks, but they are more innovative, they're more dynamic, they're more competitive. So I think you need to balance different risks within the investment space. I think over time, the best scenario is for both private-owned companies, SOEs, they all start to do well. That's when the Chinese stock market will do very well. I think, because of the political rivalry between US and China, people start to pay more attention to the potential supply chain risk. So that's why, because China market has a dominant market share in a lot of the sectors, so US Western government, they are thinking about reducing the supply side risk. But then they need to look at cost effectiveness of manufacturing in China. China is still the most competitive manufacturing place in the world. So that's why, despite so-called deglobalization effort, the Chinese exports continue to grow. Chinese trade surplus continue to grow. So just because some political campaign from the government doesn't mean that they can change the economic reality. The economic reality is that China will continue to take more market share. And there are some deglobalization effort, but does not change the overall globalization trend. I think China is definitely leading in terms of green technology, right? They produce 70% of all the solar modules in the world, and they're way ahead in terms of EV penetrations in the world. But at the same time, we look at investment opportunities from pure investment perspective. while the demand has been very strong, but the supply in China is going up much faster. So despite the strong growth in demand, a lot of industries in those sectors, they are facing oversupply situation. So for us, we look at the companies not in terms of what kind of support they receive the government and how much growth. We have to look at both the basic fundamental issue, economic 101, supply and demand. And at this point, for a lot of industries, the supply is too much. So that's why in the short term, it's not really a good investment universe. But in the long run, if the supply situation gets much better and the demand continues to grow, then probably represent better opportunities going forward.